So now we'll look at what is a non-current asset. Okay, so we'll see the rules regarding non-current asset here. So non-current asset is a very lengthy part because they include depreciation also as a part of the our consideration. So first we'll see like what is non-current. See, non-current assets are distinguished from current assets because they are long-term in nature, are not normally acquired for resale, could be tangible or intangible, are used to generate income directly or indirectly for a business, are not normally liquid assets, that is not easily or quickly converted into cash without a significant loss in value. Okay, so non-current assets are having these characteristics when compared to current assets. So how do we value a non-current asset? Capital expenditure, at least one of the conditions should be met. So an NCA should be shown in the balance sheet or SOFP, and depreciation for it should be shown in the SOPL. Okay. Purchase of NCA for use in the business and not for resale. Expenditure increases the current capacity of the asset. Okay. Any one of the definition has to be met. Okay. So it is not a inventory. Okay. And it should lead to an increase in the production capacity of the asset. So we might have some example there. Revenue expenditure. What is a revenue expenditure? Revenue expenditure are usually put as an expense in the SOPL. Any expenses related to current asset, purchase of non-current asset for resale, expenditure maintains the current capacity of the asset. Okay, so only if it increases, it is a capital expenditure. If it maintains, okay, for example, you have a bike, and in that bike you are like only like painting. Okay, that is like current capacity. But if you are replacing a new engine, okay, and now three people can sit in that bike, that becomes a increase in capacity. Okay, so that's about the capital expenditure and revenue expenditure part. The cost of an NCA. So how do you value it? Cost to bringing it into working condition, which should include the purchase price, delivery cost, legal fee, subsequent expenditure which enhances the asset, trials and tests. So all this cost should be included in the NCA. We should not include repair, repainting, renewal, administration, general overhead, training cost and wastage. So these things should not be included. So we have a quiz. Which two of the following assets are non-current assets? Okay. A motor vehicle for sale in a car showroom, a new office building that has been acquired but it is not yet occupied, short-term investments, an item of plant and machinery that is currently not in use. So there are like 4 items. 2 of them are non-current assets. See, the first item is an inventory. So a motor vehicle for sale in car showroom, that is an inventory. Okay. A new office building that has been acquired but it is not occupied. It doesn't matter whether it is occupied or unoccupied. Okay, but still it is an office building, so it is an asset. So B is an asset. Short-term investments, as the name suggests, it's a short-term investment. So C is a current asset. An item of plant and equipment that is currently not in use. See, again, it doesn't matter whether you use it or not. If you have it, it is an asset. So B and D are non-current assets. Okay, so answer is B and D. So we have one more question. Which of the following are capital as opposed to revenue expenses? So which of the following is a capital expenditure? The repair of a machine currently used in production process that has broken down. Okay. See, repair charges are only revenue expenditure. Anything which does not increase the current capacity of a machine but just maintains the current capacity of the machine is a revenue expense. So 1 is a revenue expense. The cost of extension to a factory building which doubles the size of the production area. So this is increasing the capacity. So 2 is a capital expenditure. The cost of installing a new machine in a factory. So this is also a capital expenditure, because any cost that is that is as part of installation is a capital expenditure. So 2 and 3 are capital expenditure. Let's see the answer. Answer is 2 and 3. Yes, C is the answer, 2 and 3. So that's about this question. We have one more question. What is an asset's carrying amount? Okay, there's some word called as carrying amount. See, carrying amount is what is the current value. Okay, current value, it's not the market value. It's about you bought an asset, we have provided depreciation. After depreciation, what is its worth? Okay, so it is usually cost less annual depreciation. But if it's like if there's like several years it has been there, then it is cost less accumulated depreciation. Okay, not only this year depreciation but accumulated depreciation. Okay, so B should be the answer. It's not NRV or replacement value. So B is the answer. So first we'll start from this problem. This problem is about valuing non-current assets. So what value should the non-current assets should be placed in the SOFP? So that's about the problem. So W bought a new printing machine. The cost of the machine was $80,000. The installation costs were $5,000 and the employees received training on how to use the machine at a cost of $2,000. Before using the machine to print customers' orders, a test was undertaken and the paper and ink cost came to $1,000. What should be the cost of the machine in the company's statement of SOFP? So we'll start here. So if you look here, there are some costs that have to be included and there are some costs that have to be excluded. Okay, so the cost to be included, okay, in non-current asset are the transportation cost that you bring from your supplier's place to your place. Okay, so it's like carriage inward, that cost you can take. And you can also take costs like installation, and if there's any testing, okay, testing sample or raw materials consumed, okay, testing sample, that you can take into account. Okay, you just want to know whether the machine is like working or not. So and machine cost, okay, if there's going to be any machine cost, that cost, and installation we have taken, machine cost we have taken, samples, carriage inward, any taxes, okay, paid on machine cost, so that we can take into account. So these are the costs that have to be included in the NCA. Any other cost apart from this has to be excluded. So this would be cost to be included in NCA will be shown as an asset in the SOFP, and any cost that is ignored, okay, cost to be excluded from NCA will be shown in SOPL. Okay, that should be shown in the SOPL. So that's about the concept here. So we'll start. So we'll put particulars here and amount here. So we'll begin. There's an installation cost. So the machine has to be brought and it has to be installed in the company. So that comes to 5,000. And the machine cost itself is 80,000. And there is a training given. So any cost apart from this has to be shown in the SOPL only. It has to be like shown as a cost. So the 2000 cannot be taken as a part of NCA, it has to be shown in SOPL, and there is some testing that has been done on the machine, so that comes to 1000. So put together, so this is the value of NCA. So this is the cost of NCA. So the total comes to 86,000. Right? So that's about the sum. We'll move on to the next sum.